Hello, and welcome to the Joss Brown podcast. With over 40 years of combined financial planning experience, we will discuss our favorite topics, concepts, and stories. Hello, welcome back to the Joss Brown podcast. I'm Deven Joss. We have Deven Joss here and Katherine Brown. Today we'll be discussing property and casualty insurance. So oftentimes when clients come in, whether they're permanent or they're new projects, we ask for their insurance documents and we read over them. Why do we do that?
Well, we want to see what they have. We want to make sure that that any risks they have are properly insured against.
Mm-hmm. What would those risks be?
Well, if they don't have home insurance, and if the client wants us to do long-term projections about maybe retirement plans, typically we show the house as something they have, and the mortgage being paid off. And then they may use that asset in late life to pay for an entrance to a CCRC or have their children inherit it. But if it's not insured properly, it would be an expense that isn't anticipated and could wreck the retirement plan. And so we look through homeowners insurance, auto insurance, umbrella policy, and many of our clients have second homes, or watercraft, or motorcycles, or trailers, or other toys.
Yeah. Katherine, when you're looking at the actual documents themselves, are there any red flags that you can be looking for as like a holistic approach, or what are some indicators of when you need to step in?
Yeah, so we always we always ask for clients to bring those things in, as you said. I kind of see the insurance as the foundation of the financial plan. So if you're looking at a pyramid, it's kind of the base, the risk management. So when I'm looking at life insurance, for example, I would look for when it's going to expire, when the premiums are going to go up, whether or not there's enough to cover, expenses like raising a child or being taken care of in disability. We look at liability protection. So with an umbrella policy, I might look and see if their rental properties are on there, right? That would be a red flag if they left those off of the liability for that. With the homeowner's insurance, we want to make sure that they not only have fire coverage, but that there's also coverage for things like wind and hail and backwater flooding that can happen if your toilets go up and flood your house, or maybe landscaping if they have a very large property and there's a storm that comes through. And then for auto insurance, I think what I normally look for with that is if their coverage is at least their net worth. So let's say you have a client who's worth $1 million and their auto policy can only go up to $200,000. We want to make sure that we add a supplemental to cover their net worth through an umbrella or something like that, if that makes sense.
Dan, can you explain a little bit about what an umbrella policy is and
Sure.
why you recommend it to clients?
An umbrella policy is an inexpensive way to add liability insurance to your other insurance. So you have home insurance and auto insurance typically have $300,000 or $500,000 of liability insurance. And an umbrella policy, like Katherine mentioned, could be $1 million, or I've had clients with $3 or $4 million. Above that, the insurance company starts to ask more questions. But typically, somewhere around net worth is a general financial planning rule. But it's better than adding $1 million or $2 million to all of your auto policies and then your house policy also.
We've talked about umbrella policies pretty often in the workplace. You bring up the example of the car crash on 65 a lot to provide an example to our clients on how these work. Can you go a little more in depth about that?
Sure. An umbrella, my story of an umbrella policy was a situation where somebody turned left and was broadsided and pushed into other cars. And because the auto policy had $50,000 of personal property damage, and this accident of 5 cars in Northern Virginia exceeded that, the client would have been on the hook for whatever the cost was, in addition to possibly hospital bills and other things if there was physical harm. But their umbrella policy covered up to $1 million above what was covered under the auto policy. And an umbrella policy will require certain underlying insurances on all of your other policies, and then they'll pick up what's the difference.
What kind of risks would raise the premium on an umbrella?
Second homes, rental homes, teenage drivers, attractive nuisances, some pets, think pools in your backyard and things like that. It's all the things that have the potential for somebody or property being harmed that costs money. And so the umbrella we like because it's an efficient way of adding liability protection. And more often than not, when a new client comes to us, they're obviously not looking for insurance review, but because we're certified financial planning professionals, we're going to do a review of their insurance for the purposes we previously stated, and we'll find that they don't have an umbrella policy. It's an easy fix.
Katherine, how do you typically bring up umbrella policies to your clients?
I like to give stories. I have a real life situation that I could share with you. There was a situation where a landlord had some tenants, and he was doing his property maintenance, and at 5 in the morning there was a snow ice storm, and so there was ice on the stairs for one of his rental properties, and the tenant went out to go to work and slipped and fell and broke something, and he said the tenant sued him for income for life, disability for life, and that he was very glad that he had an umbrella policy to cover that claim, because there's no way he would have known to go out to one of his many rental properties and put ice on that early in the morning for them so that they wouldn't get injured. Yeah. So that protected his assets.
Wow, that's a crazy story. Did you have something to say about that?
I had just a question. Did the insurance, the insurance, the $1 million umbrella policy didn't pay out income for life, or did it? Or would it have paid for the attorneys to fight the legal battle that would sure to come?
I didn't get the rest of the story, but I'm guessing that it was probably a lump sum settlement.
We have many clients that have watercrafts, RVs, second homes, rental properties. If a client is looking for the future and getting into one of those properties or buying a boat, how do we help them plan for that? Then we obviously don't sell insurance, so how do we go about that?
Well, there's two parts of that. One is purchasing, and so that's part of our long-term planning. You know, we look for things that the clients want to do, and if a second home or an RV is there, then we know that they're going to be either paying cash for that or financing that at some point, and then it's in part of our instructions or recommendations would be to go visit their insurance provider and get a quote, and maybe another insurance provider and get another quote, because adding something major like that to your already list of insurances could change all the quotes, and it's a good time to not review just what you have, but see what it would cost when you add that new thing to your life.
Speaking of reviewing insurance, how often do we typically look at that for our clients?
We look at least every 3 years with clients, sometimes more frequently, depending on if we know that there have been some major changes. We recently just did a review, right, where we looked over all of the home coverages, because the real estate market has gone up quite a bit, and the replacement value and construction costs. So more frequently than you would think, people needed to go back and up their policies as far as replacement value and a fire or a hazard or something like that.
Yeah, it's always definitely a good idea to review that. I think that's all we had for property and casualty insurance. Next, we will have Ed Barnhart from State Farm as our expert to talk about property and casualty. Thanks for listening.